Hello traders, in today's live trading session video, we're going to be looking at the first out of the three stats that is required for building a sustainable, scalable, reproducible strategy to help you achieve consistent performance. We're going to be exploring this and further in this video. Hi traders, thank you for joining the Master the Markets team in our live trading session video today and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It is still Naupan here, founder of Master the Markets Elite Conference and the Traders Open Day. So traders, here we are on the second part of this video series. So this is, in the previous video, we talked about the origins and overview of the SMI Elite version of this indicator, which helps you get the stats for any strategy that you want to construct so that you can exit with confidence and also build a robust strategy that you can help and achieve consistent performance. Okay. So today, what I'm going to be covering, if you haven't watched the previous video, definitely encourage you guys to go and look at it because you give more perspective to what I'm going to cover today. So now today we're going to be looking at stats number one. Stats number one. Now, what is stats number one? Stats number one, as I explained in the last traders show that I was talking to traders about in the conference, is basically how much does it move? Or in other words, I usually say, where is it going? Where is it going? Okay, where is it going?
If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone.
How do we look at this? I'll explain this a bit more further. How much does it move from your point of entry? So remember in the previous video, we said that we're going to make the point of entry consistent from the time a bottom or a top is confirmed. A bottom or a top is confirmed. So for example, on this indicator here on the trading view, you can see a bottom or a top is confirmed when the dot comes and the arrow comes at the same time. Basically, it's saying that this is the bar that confirmed this bottom. In other words, if you were to imagine each dot as one runner, so you got runner 1, runner 2, runner 3, and so on. So you see, look, this is your runner 1, your runner 2, your runner 3, all these dots, right? Now we are just going to measure how far each of these runners run. That is basically what is you are having all the numbers printed out here, isn't it? So let's say runner number 1, this one hasn't finished the race yet, but runner number 2, you see over here, has finished a race, and you can look, it's 299 pips that it has run. Okay, let me just move the line a little bit further down so that you can see it. Yeah, you can see the 299, isn't it, over there? So that is for this run that it did. Okay, 299. Now, for this one here, right, for this runner here, it finished the race at this top here, and that's 192. Okay, remember at this moment we are just collecting stats. Okay, then we're going to use this for real-time trading. So like that, traders, we keep collecting our data. All this is in relation to this question of how much does it move? How much does each runner move? From here, from after collecting all the stats, we can then find out our 80% distance that most runners run to, 50% distance that most runners run to, and a 20% distance that 20% of the runners will get to, the distance that 20% of runners will get to. This will help with your target setting. Okay, so let me show you a bit more on how this is all working together. So as I explained, the bottoms and tops, each of these dots over here, as you can see, equates to, let's say, for example, a one runner starting the race, okay, which is also known as your point of entry, okay, point of entry. So to be specific, the point of entry starts at the close of the confirmation bar. So at the dot bar, the close of the confirmation bar is where it all starts, okay. So from the start of that confirmation bar, we then start to calculate how much it runs, okay, to the next top or bottom. In a bottom to top move, this is a bottom to top move. We see how much it runs to the top. Or in a top to bottom move, we see how much it runs to the bottom, okay. Like this, we collect all this data, as I said, runner number 2, runner number 3, runner number 4, and so on and so forth. So over here, then we collect it into this table, which you can see in the SMI elite table, which I can then take it in terms of a pip measurement or raw measurement. Remember, we can put this on any instruments as well, not just currencies, anything over the 50,000, 60,000 instruments that TradingView has. We can do that. We can also measure in ATR or in percentage as well. And then I can choose over the period that I want it to be measuring. This is over 12 years. I'll just put it to 2030 here, but it's only up to so far over this number of years. And I can start off the table with 25 and I increase in 25. I can change all of this as well. And usually for OE, we use the greater than or equal to sign. Okay, this is the first stats that we can get out of after quantifying a top and bottom. Remember, none of these stats will be validative without quantifying your tops and bottoms first, which is what we talked about in our previous video.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
Now what this table is doing is what you call your open equity tables, okay? Now, what it now is telling you is, traders, there is 406 dots, okay? Or in other words, as I said, if you want to visualize it as 406 runners, okay? Each runner being one dot. Remember what I said, right? Runner 1, runner 2, runner 3, runner 4, so on and so forth, okay? So it's measuring 406 runners. Out of the 406 runners, 348 of them moved more than or equal to 25 pips. That means, you see, for example, this runner here has run 192, isn't it? So definitely he has moved more than 25 pips, is it not, traders? Yeah. So this guy has run more than 25. This guy has run more than 25. He has run more than 25. Yeah. So on, you're getting the drift. Okay, more than 25. Let me find one for you where it hasn't gone more than 25. Most of them will do it. This was a little bit 39. All right, so most of them, see this one, it's only 9. Yeah, immediately then it turned. It didn't run that much, you see. So like that, most of them will get a 25. That's what it's telling you. 348 of them out of 406 have gone more than 25 pips, which is 85.71%. But 15% of them didn't get there, like this one's over here. So on and so forth, the OE table then moves forward like that, okay? From here, we can get our 50% number, which is 125 approximately. And we can also get our 20% number, which is the distance that 20% of runners get to, which is 300 pips, okay, which is over here. From here, we can construct 3 different types of strategies, okay? The first strategy that we can construct is the 25 pip strategy, okay, 80% probability strategy, where 80% of them will win, okay, where our target is based on an 80% probability. Now, how does it help you in real-time trading? That means anytime that I get a dot now in the future, I can now take it to 25 pips, which it has hit over here as well. And you can keep doing that. What gives us the confidence in the stats for reproducing? It is firstly the large pool of data size that you can check over 15, 20 years. And also over real-time trading, over its reproducibility of its data as well, and the strength of your bottom and top quantification. These are all the things that will give you the confidence for it to reproduce itself. So this is the first stats that you can derive from the open equity table. Very quickly, I'll show you a demonstration also on the ATR number as well. So I can change this to ATR2. And I can change this to starting from 0.25 ATR and increasing by 0.25. And then finally, then we can then take a look greater than or equal to over the same amount of period. You can see that 406 runners once more. How many of them run more than, how many of them, what is the distance that 80% of them get to is 0.25 ATR. So let's say, for example, in a strategy, I want to construct my exit rule. I can say, let me construct a target where it's 25 pips or 0.25 ATR, whichever is bigger. Okay, right. So that is what I can do. So you can see how powerful it is when you have quantified first. The first step is always, traders, is quantifying your tops and bottoms. It's quantifying your tops and bottoms. Now, the final thing what I want to say before I conclude in this part of this video series on the smart money indicator on the 3 stats is, some of you may be thinking, okay, but what makes this indicator better than others? What makes this indicator better than others? Okay, let me explain to you. How do you actually answer that quantitatively? Okay, now let me explain to you. If somebody were to say, okay, let's say now, this is the MTM MasterTheMarkets open equity table as taught to us by institutional quant traders. Now let's say John comes up with another one, or ABC company comes up with another open equity table, their own way of bottom and top quantification. How do I say that John or ABC company bottom and top quantification or OE tables are better than MTM OE tables? How do we quantitatively do that? What you do, traders, you take a look at the 50% number. The 50% number, the distance that 50% of runners get to on the GBP/USD on a daily frame is 125 pips, is it not? Now, if ABC company or John's open equity table, he comes out with his own quantification of bottom and top and comes out with his own open equity table. If his open equity 50% point is more than 125 pips, that means it comes more further right on the table. That means his 50% number is on 175, then definitely his quantification is better than MTM's quantification. However, if his 50% number is here, more on the left, which is 50 pips, then ours has outbeaten his, because ours is 125 more than 50. That's how you quantitatively assess which OE or which open equity table or which bottom and top quantification is better. Which bottom and top quantification is better by comparing the open equity tables, especially the 50% mark, whether it's to the left-hand side or the right-hand side of the table. Okay, traders, I guess that's pretty much that on this video, what I wanted to share with you on this first stats out of the 3 stats that I wanted to share with you in this video series. As we go along, we will talk about the other stats as well to help you build a sustainable, scalable, reproducible strategy and help you achieve consistent performance. Okay, a lot of things for you to think about. Do reflect on them. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master achieve consistent performance, and change lives.